I'm back with another block rocking update on everybody's favourite stock, GME. I'm also giving away a share in GME, so stay tuned for that if you want to do your bit in sticking it to the man. And it's not really a bad deal. I'd only ever consider selling them for $69,420. Oh, and before I start, this isn't financial advice, this is pure madness. But I like the stock. Do you like the stock? Comment below if you like the stock. First things first, everybody wants to know, is the short squeeze still on? Maybe, but with new data later today, we will soon know more. The price has moved down in what some call short ladder attacks. Whether you agree with the terminology or not, the process is straightforward. Market participants, usually big hedge funds or prop traders, will fill the order book with low price offers to sell. They then buy these from each other and put them back on the market slightly cheaper. The rinse and repeat of this strategy means the books move down with lower and lower orders and the price is depressed. People say, but isn't this illegal? No, not really. It's quite similar to how retail traders do their business, so it's very difficult to regulate or police. Order book spoofing is illegal, and it's similar, only no trades are actually executed. It's just pushing orders to the books and then cancelling them to affect other people's decisions. The simple way to assess if the short squeeze is still on is just to look at the number of shares shorted, also known as the short interest, versus the number of shares actually available to trade. This is called the float. Lots of people ask, when will the short squeeze happen? Or when will the gamma squeeze happen? This is very difficult to predict, but lots of people try with lots of different methods, with the assumption that once we reach a certain checkpoint, the hedge funds will have no choice but to cover their positions. When this isn't strictly speaking true, and analysing when the short squeeze will happen certainly isn't an exact science. The simple thing to remember is that if the short squeeze happens, it'll be when those holding a short interest are forced to cover by buying long. A great question that was asked on the comments in my last video from Al Katawazi was, I have seen huge volume of call option trades for the 19th, and if they're in the money at Friday on close, don't they get auto-exercised, and the person on the other side of the contract needs to pony up the shares Monday morning? I'm not exactly sure how the process works, but every time I have exercised my options, that's how it's transpired. Perhaps there will be so few shares in the float, it may cause this hyper spike you speak of. Lots of people will be asking themselves this question, or at least now they've heard it, they'll want to know the answer. Which is, as always, perhaps. But this is a great question because it gives us cause to think a little bit deeper. Remember two important points about this. Firstly, when an option contract expires, the holder has 2 days to settle. That's 2 working days. So if a contract expires on a Friday at close, then they have Monday and Tuesday till close to settle that particular trade. Secondly, those traders who can't afford to meet their obligations when their option contract expires meet a failure to deliver deadline. Of course, their positions are closed, so is their account, and they're given 13 working days to meet their obligations. You're fired! This does not require them to buy shares.
I am very, very sneaky, sir.
Between these two factors, it makes it unlikely we'll see a price spike immediately after an options contract expiry. For a variety of reasons, it might be easier to think of things along these lines, that somebody holding a short position is going to want to close it or cover it before the options contract expires, because if they have to do so subsequently, when markets are closed, there's less shares available to trade, and the price is much more volatile, and there might be other market participants doing the same thing. So they're more likely to close or cover before the option contract expires. But this event isn't necessarily tied to the expiration of options contracts, although that can have an effect. It is in fact the trigger point when the available shares to trade, the float, drops below a certain threshold, triggering a risk event for people holding short positions, which they need to mitigate. And it's impossible to predict exactly when that will happen, so predicting the timing of a short squeeze or a gamma squeeze is really difficult, and it's certainly not an exact science. And is the original gangsta Deep Fucking Value still in on his trade? Well, let's take a look. The most recent indication of this is yes. He is held through incredible price movements, so there's no reason to think he has sold since this was published, seeing as the price didn't move that much between then and now. What about some technical analysis on GME, huh Jimmy? At this point I should say I do fundamental and technical analysis. I might decide where and when to enter based on technical analysis along with my stops and take profit targets, but part of the reason I decide to get in something in the first place is based on the fundamentals, but this section is about technicals. Start on the daily chart, as you can see here. The brush tool, I'll mark out the fact that we're below the 50 period moving average but above the 200, though we have had a cross on the RSI below the EMA and the AD minus has crossed above the AD plus. That's not so bad when the ADX is dropping, but to counter that we have weakening momentum on the MACD with a potential for a negative cross. We have divergence on the RSI with our most recent low lower than our current low, yet our RSI being lower than it was. On the 4 hour we can see that there is a question mark about the DMI. Are we going to get a positive cross? And even if we do, is the ADX pointing downwards? Is the MACD weakening in negative momentum? That could be a positive sign, but we do not have confirmation on the RSI. That I should say that it looks as though we're going in for a retest of the 35 buck area that I mentioned a few days ago. And I should also point out that if you want on-demand TA on any stock or crypto, then head over to Rocky Outcrop's channel where he does it all the time, and I think he's got a live show tonight, so be sure to check that out. Another thing that people have said to me in real life and on YouTube is, what is an alternative to Robinhood, seeing as they're a bunch of scammers? And there's a couple of different options depending on where you live. If you're in the US, a really good option is Cash App, and if you're in the UK, you might want to look at Revolut. But if you're from somewhere else, just let me know in the comments and I'll do my best to get an answer for you. I'm also giving away 1 share in GME. Whoa, giveaway! Well, you might think to yourself, that's only 1 share. But I'm not selling any of mine until they reach $69,420. So, some people might say it's quite generous. So if you've got diamond hands and want to stick it to the man, then share this video on Twitter with the hashtag GME and hashtag Tradespotting. That way I'll be able to find it. I'll pick a winner at random on February the 22nd. So make sure you enter. All you need to do is share the video with those hashtags. Thanks. Got lots of great videos coming up. One's on how to use the MACD for an 80% success rate on your trades. Imagine that, 80% of your trades being successful without even needing to engage your brain. And the following video is a cracker on the coming world war and how you can use Bitcoin to make bank when the bombs and bullets are flying. Please like this video. I love making them and I'll make endless more if you want. And remember, diamond hands. There is no help in rushing to be rich and plenty of wealth in waiting to be right.